Welcome to Around the Coin. This podcast is with Claude Eguienta, the CEO of Mimo Capital. Mimo has about 40 people. They're focused on building DeFi projects, specifically recently, to allow people to purchase Treasury bonds, earn yield on those bonds in crypto. We talked about how they're technically doing that. And we discussed the world more broadly, the influence of US regulatory policy on crypto related to the rest of the world. We discussed the impact of Asia. We discussed the long-term arc of crypto on humanity. Really interesting, wide-ranging conversation. Hope you enjoy. Here is Claude. All right, Claude, I'm excited to be chatting with you. Like we were just saying in the pre-show conversation, why don't we dive in and talk a little bit about the state of cryptocurrency as it's perceived by people? And I know this is kind of a subjective question, but how do you sort of view where we are? Given that I'm in the US, there's a biased perspective that I have. I don't get to travel certainly as much as you do. How do you view the state of cryptocurrency, more specifically like tokens, token projects? Where are people generally bearish and where are people generally pretty bullish at this point that you're seeing?
Well, I think this is a very interesting question because where you are in the world will kind of guide the answer. I would say that it's one of the first times, not the first in crypto, but one of the first, I would say, eras where you have a strong split between what the US will think and what the rest of the world will think. Because there's the regulation, the regulatory environment with the SEC going after quite a few players that makes it somewhat scary to on every side of token projects for the Americans. It's scary to buy because maybe this guy will be considered a security tomorrow. Maybe the price will drop. Maybe those guys will go to jail. I don't know. And then you have the other side, the issuers. Maybe we should make something, but ban Americans. Maybe we should do something. So essentially, there's kind of a break inside of the token market, and the fact that the SEC is not really stopping is kind of contributing to this climate. So, but outside of the US, it's pretty interesting. It is a proper, I would say, a good bear market. What I mean by good, as it's the fact that there's not much fear. There's more of nothing's happening. The waters are calm. People are not really super stressed. There's volatility here and there. There's one day where it goes up and then a lot of days where nothing happens. And then one day where it goes down and a lot of days where nothing happens. People are not really in the climate of fear or greed. It's pretty muddy waters. And that's for people inside of the industry. And for people outside of the industry, there's just way less interest because people outside of the industry get their interest mostly in bull cycles, like when the prices go vertical because they hear their neighbor just bought a new Ferrari, or they just hear those crazy stories, or in the beginning of their bear market when they hear their other neighbor just got liquidated and lost their newfound fortune or something like that. This is when people outside of our industry relate to the crypto world. But within the industry, it's slightly different. Right now is a good moment for people who want to be building. So you have a lot of, when you have conferences and all that, tickets to conferences still sell out in seconds. You have hackathons for engineers that come and want to build new stuff that still sell out. People just want to come. There's a lot of energy for people who want to do new things. Everything is crazy. If you want to find a form of an interesting metric to see the interest in the crypto space from a builder perspective, look at the time it takes to get a new code base audited. Because auditors, quality auditors, receive a lot of projects. So the longer it takes, the more, I would say, the more interest there is in getting stuff audited, right? Assuming their resources are not too elastic. So right now, it still takes to a top tier auditor 4-5 months to get your project in for Ethereum stuff. On Solana, it can be faster because there's less competition right now. What I mean by Solana, I mean auditors that can understand the Rust code bases. So it's kind of a different family of programs. So it still goes faster. I would say maybe that's a good indicator that there's not that many people building at this moment. But outside of that, it's still pretty long to get a very good audit. In comparison, if you're middle of a bull market, it takes you a year to get a slot in the most prestigious firms. It can take a little bit more than this, but it's generally about a year. So there is less interest, but still quite a lot. And even though like another metric would be like the funding, there's still quite a lot of funding in new projects. Valuations are lower, but there's quite a lot of funding. So all in all, I'd say like within the industry, there's no, at least there's not much fear. People are not thinking that crypto will disappear tomorrow. They're just pretty understanding that, well, prices are not as good as they used to be, but that's fine. They keep building. And outside of the industry, people are either not paying attention or just loosely paying attention.
Right. Okay. And then let's talk about Mimo a little bit. Let's jump right into it. So just to set the table here, you guys are focusing on, well, why don't you tell me, what is the current focus of the business? What is the size of the business? Maybe in terms of people, money raised, revenue, however you measure your success so far.
Well, we do not have, at least in the current incarnation of the business, there's no external investors, and the project is not generating a lot of money. It is generating some money, but like not enough to pay the burn rate. So we're still like burning some of the money we've generated through like mostly management and like resource management so far. And the focus of the business, I mean, we're roughly like 40 people, and the focus of the business is about helping people to stay in crypto, but enjoying the fruits of whatever happens in the real world. So it's pretty simple in the fact that it used to be that crypto was only for pretty specific category of assets, crypto native assets, like mostly volatile assets, and then stable coins. You had like the family of assets that go up and down like wildly at every cycle, and then stablecoin that just follow currencies. And if you wanted to have anything else than this, you needed to leave the crypto system and go to a bank or something like that. But what I mean by anything else would be things like structured products or debt products, or like typically like sovereign bonds, things like that. If you wanted to have exposure to this type of thing, you would need to go out. But for a long time, it didn't make any sense because bonds didn't pay. And when the bonds do not pay, there's a lot of things that just decide not to pay, except for debt in other country, like emerging market, which was not very interesting to a lot of people inside of the crypto world. So for a long time, it didn't make much sense to search. But at some point, it became interesting. Like in 2022, when the Fed decided, made it very clear that they were going to raise the interest rate, it became like really clear that sovereign debt was going to be attractive all over the planet. And at this moment, we realized like, wait, maybe we can help people stay in crypto, but still get the benefits of this type of investment. And we decided to build like this protocol called Kuma, which allowed people to get exposed to the yield of real world assets in a way that would still be compatible with what we've been doing before, which means DeFi. Because we're a DeFi company at first, right? So we didn't want to make something that leaves people in crypto, but puts them in the form of a crypto jail. We wanted people to have to stay in crypto and being able to move their assets freely within reasonable boundaries, but still like move their assets like a DeFi product, and not like something where you just deposit some USDC and wait for yield. It had to be something more of a DeFi primitive, because if you know anything about DeFi, the way that people tend to represent it is money Legos. We wanted to make a new money Lego that would represent like yield from the real world.
Okay, so let me just try to make sure I understand this. So Mimo Capital, there's roughly 40 people, and the majority of the revenue has come from, you said management. I'm not sure what that means. Maybe help
By
clarify that first.
I mean that the company's been around for long enough so that the resource management, like you have some ETH, you do a couple trades, you do a couple things like that. Like the company managed to stay afloat by essentially trading for a while. It was not the intention of the business, but it managed to keep the company afloat like between the cycles.
Got it. Okay. So making good trades, making money on trades. And that pays the roughly, I'm assuming it's like $4 million a year to have 40 people on payroll, something like that. And then the business itself now is focused on, you kind of explained why the interest rates and the Fed have made an opportunistic pathway for building a DeFi protocol called Kuma that allows people to Can you explain that in a little bit more detail? So it allows people to do what exactly? Hold a stable coin pegged to the US dollar, or?
Well, it's not exactly a stable coin. Like, I mean, if we want to go into details, again, the goal is to get people in crypto exposed to the yield from the real world, right? Like there's really the real, if you go to your bank and you tell them, I want to spend like $100,000 in Treasury Bill, you're going to see your banker, they're going to like do something with you. And at the end of the day, if they accept, you're going to have some like in your brokerage account, if your trading account or something like that, like depending on your bank, you're going to have $100,000 worth of T-bills, and it will appreciate like little by little. And I mean, it is not going to appreciate little by little. The secondary market value of it is going to appreciate little by little. But when it reaches maturity, you will be able to claim dollars in exchange of it. And you'll just have your dollars, and you will have realized a gain of today, at the prices of today, roughly 5%. So that's the way it would work if you were to go to the bank. And if you have USDC, or USDT, you would not be able to do such a thing. We wanted to reconcile the concept of staying in crypto, but getting access to this yield.
And specifically the yield from Treasury bills.
Not only any form of debt instrument, Treasury bills just being the first.
Got it. Okay. And that's currently what you're focused on, or is there other?
Yeah, that's what we're focused on. Yeah. And the way we're doing this is pretty, it could sound convoluted. That's why I didn't dive into it. But if you want to know the specifics, it's we have a company, a regulated entity that buys debt and sells it in the form of NFTs. And these NFTs get you a claim on what the debt sells for on the secondary market. So that's a pretty straightforward thing. We sell you some NFTs, you sell it back to us more expensive, because in general, debt tends to, I mean, if you're looking at Treasury bills, they tend to have a secondary market value that appreciates as they get closer to maturity. They have a volatility that is coming from the expectation of the next cycles of interest rates, because if the next one's going to pay more, people want to sell the current one so they can get the next one, kind of thing. The opposite, if the next one is expected to pay less. So that's you have these type of cycles, but generally they just tend to go up following a normal, rather straight line towards maturity. And if you look at the other side, you have those NFTs. NFTs are interesting, but this is not easy to use in DeFi. So we have built a protocol with our community, and the DAO that we have has deployed this protocol, and this protocol accepts those NFTs as payment in order to mint some tokens that would be trading 1-for-1 against $1, but that would bake in the interest that is received by the NFT. So the way they would behave is very similarly to stablecoin, except they would only be stable relatively to the price of the underlying asset. This is not the goal is not to be a stablecoin 1-for-1 for the dollar. The goal is to be a stablecoin 1-for-1 compared to $1 within a Treasury bill, kind of thing. So if the Treasury bill trades up, it would be more expensive. If the Treasury bill trades down, it will be less expensive. That's more of a indirect exposure to it. And these coins are interest bearing. So if you have 100 in your pocket, yeah.
I was going to ask, how is this going? Is it working? Are people buying these NFTs that represent Treasury bills, or is it? Is the market established for this?
Well, we sold a few of them. We came out publicly only on Friday. So
okay.
I don't have much data to give you. And those tokens are now currently online. We will see how it goes. There's only, at this moment, there's only a few trades going on left and right, because we have a whole educational layer to bring to people. As I was going to tell you, those coins end up being let's say you have 100 in your pocket today, you will have 105 at the end of the year if they pay 5%. So it's the balance grows up in your pocket. It's kind of new for a lot of people. So we need to educate the market. We need to tell people, think about a USDC, except it multiplies within your wallet without any user action. It's kind of a thing. It's not exactly the same, but this is what we need to help people understand. Those are DeFi tokens. Those are not tokens issued by the company. So we need to explain that the company is not responsible for them. It's more of a DAO thing. The company is responsible for the NFTs. The DAO accepts the NFTs as payment and decides to mint new token because it has the NFTs behind. So those are two separate things. We have a regulated entity and a DAO on the other side. And unlike the company, the DAO is still subject to governance rules. So it's another layer of education that we need to have with people. Like all those things that everything needs a vote, everything needs like governance, a proposal and everything. We're playing by normal DAO games.
Yeah, interesting. And so is this the U.S. Federal Reserve interest rate and Treasury bills? Is that the first place you start? Do you see that as being like an expansion across every other like sovereign debt instrument? And why U.S. Treasury bonds first?
Well, because one of the goals of this was to try to imagine what would Circle be if it started in 2022. Like, what would it be if it was DeFi centric and in 2022? Like, when we know so much about how we can do interest-bearing tokens, what happens if you have interest that you can pay to people and all that. And this kind of mental exercise led us to build this. And it was just natural to start with the dollar because, well, now that we have this, let's do this. But this is clearly not the goal of the company to only have a dollar. I mean, Mimo was started on a euro stablecoin, and we do believe in the necessity to have like multiple currencies, if any, for forex trading or anything else that users may want. Like there is a lot of volatility between currencies that we have observed, and we do not think that everybody should take the bet of becoming an armchair forex trader. So we want to have like multiple currencies on chain and let people build, for example, like currency baskets and stuff like that. But then they would pay interest. It starts to be interesting. We want to we just want to build the Lego bricks so people can do those things. And therefore it's pretty important for us to have like multiple currencies and using the bonds that pay.
Well, let's talk about the markets for a minute. So US obviously has quite a bit of turbulence on the banking side of things. Interest rates have gone up recently. There certainly seems to be a trajectory towards a world that is multipolar. The UN recognized that recently. And I think the rise of China, India certainly show that the US is not going to be the dominant power. Do you view the influence in the crypto world as being another problem or another way that people think about stable currency? Typically, people think of stable coins as a one-to-one backing of a US dollar in a bank account to a stable coin, USDC and Tether. Do you see, as the US presumably decreases its financial influence in the world, loses its global reserve currency status, do you see Bitcoin becoming the global reserve currency? Do you see it becoming maybe multipolar in that there's many different currencies that people are using? Or how do you sort of see the next few years or 5 to 10 in terms of the breakdown?
Yeah, I think this is a very good question. And I'm not 100% sure that I have enough material to provide, I would say, a meaty answer to it. Therefore, I decided to put myself as an infrastructure provider, as in like, well, if we're not sure what's going to happen next and what will be a decent currency, either for people to do X, for people to do Y, for big companies and institutionals to like hold and trade, like whatever would be medium of exchange, whatever will be a medium for storing value, it starts to become like rather difficult because there's a lot of factors there that are way beyond just technical reasons, right? It's not even only economics, it's like politics in the middle. And when you start to make bets that have that many dimensions, you're so close to gambling that we didn't want to enter this thing as a company. So we thought, let's just make sure that we position the company in such a way that no matter what the users need, we will be able to serve. So that's why we're tokenizing multiple things. And this is one of the reasons why we're moving forward with quite a few Bitcoin related primitives that I won't be able to explain today because it's still at the research stage. But
Sure.
we do understand that there could be, like, Bitcoin could have a much more important position in the future than it does have now. And if we're right in this, there's quite a few infrastructure primitives to keep building. So
Mm.
We're working on those as well. But if to answer your question, like I unfortunately have to explain that. Yeah, not really sure. Like we will just try to make the rails for that.
No, it is certainly is complicated. I mean, you certainly have the influence of other countries. China puts a lot of pressure. India is certainly growing a lot. And then you have the disincentivization of using the US dollar as the reserve currency because the US controls the printing press. So when they print money and they give it to their citizens, everyone else loses. It's like a tax. So there's a massive disincentivization there. And then on top of it, I view that the cryptocurrency is the next wave of financial technology. So to not be using that as the core rails, you're using the horse and the car is being invented. So it does, like, I don't know if the answer is Bitcoin per se, or if it's more multi-currency, but it seems like it's going that way. One thing we were talking about pre-show is the fact that the US has taken an orthogonal perspective on regulation relative to the rest of the world on cryptocurrency, and quite clearly, in my opinion, the wrong direction and trying to ban it effectively. Where do you see it? You live in Dubai, you're in France, you're Italy, you're traveling all throughout Europe. What are countries generally aiming towards? And if you can pick up on it, what's the sentiment about the US's stance on cryptocurrency? What do you hear people saying about why the US might be so anti-crypto?
That's okay. That question will have many answers, but let me tell you a couple of things first. I talk to a lot of project founders because first, I invest, then we invest as a company sometimes, and then I just help founders get to their goals and stuff like that. Founders know each other; it's a normal thing. I had never seen that many projects try to stay as far as possible from the US as I've seen recently. It's really a clear thing. Well, the US represents a great market. It's big and all those things, but as big as the market can be, I'm not going to jail. So people, boom, they ban. We at Kuma made it pretty clear that we are not selling our NFTs to American residents. It was just a thing. We could look into this, and we are actually exploring a couple of things. But before we have a certain form of certainty and regulatory clarity, and maybe a different type of asset that we will sell there, we just prefer to say it's a red flag when somebody a KYC gives us in the KYC that they are residents of the United States. It's as bad as coming from Iran. It's that's where we are.
Yeah,
that's where we are right now. Because, for example, if you're from Iran, there's clear the FATF says no. All right, you cross that country and that's it. But in the US, it's different. It's not about saying no. It's more about we don't know, but they are very clear on the fact that if you're doing something and we do not like it, even a couple of years from now, we're going to knock the door and you're going to be in trouble. So we're yeah, until they have regulatory clarity, we're just not going to play with them. And we're not the only ones with that. And now that China is reopening the door to crypto via Hong Kong, there's a very large market on the other side of the world. And there's a lot of customers, a lot of juice, and a lot of people with problems to solve. So we're maybe there's another place to solve problems for. Maybe the American market does not want our brains and we're going to go somewhere else. And when you have even American founders that come and tell me, yeah, I can't really make interviews and all that. I don't want people to know I'm American because I want to keep building stuff in the industry and I'm going to build for China and all that. American founders came to tell me that. I was whoa, we are here already. And that was the thing.
Yeah.
So
yeah.
I would say it's more of a split, but like everything, because it's mostly political and not economical, it is likely temporary. So we will see. The country has, it's still, the US is still a leading force, but it's still a democratic country. And I believe that with time, maybe if that does bring value, Americans will want to have some of this value and will find a way. And if it does not bring value to Americans, maybe it is just that crypto was not a good solution for that market. It's not necessarily a bad thing. It's not the entire world does not have to be homogeneous in technologies, right? They're China uses WeChat and they're very happy with it, and the rest of the world does not, and nobody died from that. So not everything has to provide the same value for everyone. And maybe America and crypto is a story that does not need to last. I don't know. I'm not American. I don't really have a voice there.
Well, I haven't heard this perspective, so I want to dive in a little bit. So I view crypto as a progressive leap in the technology capability. So it's like a car to a horse. Like it's not apples to oranges. It's like the word fruit to the actual object. It's a completely different level of cooperating. And so I see it as like, if you stick with the old rails, effectively, to me, it feels very similar. Like we're going through this transition of power. Like the churches used to rule the world. And for the first 1,000 years, maybe 1,500 years after Jesus, the year 0 to 1,500, it was like churches. The Catholic Church was dominant, and they basically controlled it. And it was like the king. So it was like if you're head of a church or you're king, you basically have the law of the land. And then kudos to the France, right? The revolution and all that changed, and democracy was introduced. And so democracy was like, I think of it as a technology. It's like a means of cooperating amongst people. And the U.S. Constitution in particular was like a framework for deploying that technology. And I view Bitcoin as, and maybe you could even lump like early successful projects like Ethereum into a constitutional framework of sorts into deploying that technology. Certainly many other projects, Solana, you can go down the list, were inspired by the work at Ethereum inspired by the work at Bitcoin. And so it's like this pattern of cooperation using the internet first as the primitive that allows people to do things that you couldn't do using the old methods, right? Because in the old methods, your money's in the bank. Well, the bank is stored by somebody else. And so it comes down to control, in my opinion. You never actually have control. If the US government prints dollars, well, then they ultimately have control at the end of the day. And so I view it as a shift in control. And maybe
even before the print.
Even before the print, right?
Yeah.
And so it's
like
like
the banks are regulated.
The banks are regulated, and it's very centralized. And not that centralization is bad per se, but when things become very centralized, all of a sudden there's an opportunity to have decentralization. And my perspective is, and tell me how you see this differently, is that the West and the US primarily is known for and has found success in the decentralization, both of democratic power. Everyone gets one vote, and that gets counted up, and we choose the president. And that should also be true in principle with money. But now I see this conflict happening in the US where the accumulation of power presents a conflict of interest, right? If we now are willing to give up control of the US dollar, well, that means centralization in the US starts to decline. And so I don't know. I mean, I throw that back to you kind of in a jumbled assortment of ideas, but basically like, the US is kind of overly centralized.
To me, it's interesting and sad at the same time that even in the concept of living in democracies like we do in the Western world, we still have a notion of us versus them kind of thing. Like, oh, damn, this is not supposed to happen. It should just be us. Like, it should just be, if we're the ones voting and all that, but it's not as simple as just a democracy everywhere. It's just like a democracy and then structures in place. And then like a concept of, but if we give people that much power, they will do something and abuse, and you will have like whatever consequences. And then the issue becomes that it starts to look like democracy has multiple gears. Like there's one gear for electing a president, and there's another gear when it comes to being free about like managing your own resources. Like, and when it's about like the money that you have, like, oh yeah, it's yet another gear. Like it's like, oh damn, I thought we were like in a democratic system. Now it looks like we're afraid of the people like who are like who we're electing, even though it should be the opposite. If we were to push democracy to what it was supposed to be, like we should not be afraid of the people we vote for. But it's kind of how it looks like. I do think that even in the Western world, there's still a separation between the US and the rest, mostly because in the US, the fact that there is no clarity around crypto is likely, in my opinion, mostly political. It is not necessarily something that like it's not a technical reason or anything like that. I think it's really a couple agencies that fight for governance over the space of crypto. And given that these politics did not occur the same way in Europe, we have more clarity there. Therefore, there is a different environment. So I think it's not the West entirely. It's really specifically the US that is like more difficult to work with at the moment. And it might not always stay like that. Like, I mean, we're seeing like a couple companies leaving Canada right now and stuff like that. So maybe there are different frameworks that are opposing crypto. I am not entirely sure what's going on everywhere. But from what we're seeing, the US is still pretty special in the fact that it's one, extremely big, two, has very little clarity. So it's very attractive to a lot of people to go there while still like scaring them. And for what you're talking about regarding the fact that crypto is a technology that is essentially like superior to the previous financial system. I mean, I've been building in crypto for almost 10 years now. Like first crypto started in 2014. So I'm a strong believer that crypto has the potential to help in some form. Like there's many things that we can try, and there are things where crypto is just a better system. There are things where crypto is not there yet. And I tend to be rather supportive of decentralizing things. That's why I'm a believer in DAOs and stuff like that. Like I like this concept. I think it's more of a direct representation of how things should be. It feels like it's enough structure to help, and like not enough structure to slow everything down, but enough structure to help when you need and stuff like that. So I think it's just pure progress. Like crypto and the concept of DAOs and stuff like that to me is really a nice addition to everything we had. That's why, for example, like I'm not necessarily like a maxi of any currency, but I'm a maxi in the concept of what we've built in crypto, like the crypto industry. I'm a very big supporter of that. And I do think it's really good. But again, as I was saying, if the American market does not want this, if American people do not want to vote for that, like do not really see this as necessary, maybe like it is that the way things are working is fine with them, and that's it. Like, or it will be just a test to the democracy. Like if the people want something and they can't get it because the government wants things otherwise, and maybe you don't really have a democracy out there. I don't know. You tell me.
Yeah. No, these are good questions. I kind of want to ask you what more on this. Is like, if we play this out and say, okay, maybe you're right there. Maybe there's something here. It sounds like maybe there's something people in building crypto don't realize that might be a problem. If we look forward, say 15 years, 20 years, and we look back and say, oh, remember when we were such young guys and we were so excited about all the future of cryptocurrency. We now know that there are these major flaws that have resulted in real catastrophes and tragedies or failures in some way. What do you think the possible failures are of introducing the cryptocurrency and the technological ramifications that it has with it? Like, what are maybe everyone sings all the glory of it and all the praise and all the upside, but what might be some of the negative externalities in the future?
Well, the thing that we hear all the time is like the problems around monetary policy, right? Like you have people working super hard to establish like good ways that their money should flow, and that essentially like they have great tools in the name of inflation and things like that to make their economies grow and or stabilize them. And with crypto, you're essentially given the keys to this to another set of people. Like if, for example, Bitcoin was the main thing tomorrow, and it would be like kind of like going back to a gold standard. Like for a lot of people, it would sound like a strong economical regression because we're losing tools that a lot of people have been building so far. Some people have been saying that those tools are more tools for manipulation than tools about like economic stabilization. It's a conversation that would be worse having, like it would be a very long conversation actually if we were like to go this route. But it is to me like this is the main argument we hear against that. It's really the issue around like policy. The other thing we hear with crypto, there's always the age old issue of money laundering. Like we keep hearing that if crypto grows, money laundering will be a thing. Crypto is a thing for like moving money from drugs and all that. But when you look at crypto frameworks all over the planet, it's if you were to launder money tomorrow, maybe using crypto might not be the best, especially in places where crypto is regulated. And so I don't think that it's inherent to crypto, like this whole thing. Like people have been laundering money with banks very successfully for a very long time. HSBC could tell you a couple of things about that. And like in retrospect, like I'm not sure crypto is bringing much innovation here. So like it's again, like I didn't intend to just bring a line of defense for crypto, but I'm just telling you like what we keep hearing about, like the risk of the growth of crypto, right? Mm-hmm. And apart from that, like there is another thing that we keep hearing is that crypto has created a form of a distortion in demographics, like in the pockets of income. Like crypto bros getting rich at every cycle, and the rest of the world like getting super poor and stuff like that, like at the end of the cycle. And it starts to be like a new class of people that get money. We don't really know how and stuff like that. And when there were 5 people, we didn't really care. When there were 1 million people, it starts to be like pretty bad. If there are 100 million people, it starts to be something that was not planned again. Like, and when you go against the plan, when you go against like the way resources were supposed to be allocated, people are supposed to work, get a job, and then make some money and do this and that. And in the middle of that, you have something that was to be like just 1 or 2 anomalies, people that make a lot of money. Now you have a lot of them, and that are getting money at the expense of other people, because there's still this image of this concept of a zero-sum game. This distortion is something that is not pleasing everyone. So like all in all, that those are, I would say, the main things we hear about the problems of crypto. In my opinion, that the benefits that crypto can bring wildly offsets those issues that I just mentioned. But I'm obviously biased. I mean, I wouldn't be here, right?
Right. Well, you don't need to be perfect. You just need to be better. And it sounds like the 2 points there being, one, there might be, with greater freedom and control of the individual comes greater potential for abuse of that power. You can buy and sell illegal goods, weapons and drugs and that sort of thing. And there's no centralized control to stop you from doing that. It's definitely a concern. I even think taxes, like, do we have a reliable way of pooling resources together and then funding projects as a collective? Like that still seems a little questionable to me, whether that's easily done or not. If everyone has goodwill, yes, but I don't know. And then also, the influence of basically, does one believe that there's a necessary role for the collectivization of power? Like we need to build bridges, we need to build roads, we need to invest in the 3D infrastructure. And so to do that, we need to collect taxes. And then presumably enforcement of illegal activity is a good thing for everybody. It sets cultural norms. And I think that you can see this being played out in cities like San Francisco, where they play out the policy of let people do what they want and decriminalize activity, so much so. And then it swings so hard where you're like, you have an open air drug market in the middle of the city. And it's like, that is, even people who are very on that side of the tribe would now push back on that and say, hey, we need some kind of enforcement. And so maybe that becomes difficult to do with cryptocurrency as the base layer of financial trade. Yeah, it's
a thing, like, but I mean, again, like I would like to like shift a little bit towards what does it bring to us? Like there's this easy money flow and all that. But there's one thing I realized like this week, like, I mean, I knew about it, but it became like crystal clear this week to me. I like vintage cars. So I have a vintage car and all that. And the guy who owned so the last one I purchased, I mean, I have a Mustang 67 and like I bought a C3 Corvette, like before the big window, like so it's a Stingray. And I got like a very good friend of mine that owns a garage that works on those cars. And he was like, oh yeah, nah, crypto. He talks to me about crypto, and not only crypto, but investment in general. And I was with another friend of mine who's into classic cars and him, and we realized like how much the people who are in crypto know about finance in general. Like not necessarily like in the traditional way of learning finance, like at school, but they have more of a, I would say, an interesting relationship with money that is very different from the generation of people who did not touch crypto. Like for people who are in crypto, like every time there is a Federal Reserve meeting, it's like watching a big game of the NBA or something like that. Everybody is knowing.
Yeah.
Everybody's following like money all over the world. Like it's people. If you talk to them about like how money flows or like you tell people about new regulation in anti-money laundering. Like if you ask people what is the FATF, if you ask people, like people who are in crypto know a lot of those things. And I'm not talking about people who are building like me. I'm talking about like even users. And like this guy who works on the cars, did not know a lot of those things. And I just dropped him like a couple things in crypto and tell him like, read this, read that, get into crypto. And after a while, I realized like, damn, this thing works. Crypto is just such a good school. And this is something that, like, of course, the beginning of that, like when you get into crypto at first, like you just start to understand like the pump and dump schemes and things like that. But after a little while, you start to understand way more. You start to, because you want to explain those things that you see all day. Like, and the humans are curious, right? You see something going up, going down. You want, why is it going up? Because those things, like those guys do not trust that it's going to go up. So maybe it's going to go down now. Or maybe this happens, or maybe that happens. Right. Maybe supply is X, or maybe this and that. And then you look into tokens, and then you look into other things. And then you start to think about like money as a much more broad concept than before you were into crypto. And I realized that just crypto is a very good school. Now this guy, because of his exposure to crypto, became very interested in, I would say, I was saying finance, but I would say it's more than finance. It's money and economics, but it's really money in general. Like people have a different relationship with money thanks to crypto. And this thing is, in my opinion, very crucial. Like if we were talking democracy a little bit earlier, if you want people to make the right decisions when they vote for the presidents, how do you expect that if people do not understand what money is? Like and I'm not saying that like crypto is going to explain everything about money, but at least it opens the door.
People are more interested. It creates an interest pathway. People are now talking about like, what is the definition of money? What's the Howey test? What are the governing bodies that? Yeah, no, I totally agree. It's similar to, in the sense, you could look at the silver lining of COVID as people becoming more interested in the policies of healthcare. People now know more about vaccines than probably ever before in the last 100 years. So you're definitely right.
Again, it doesn't mean that everybody's going to be right, but I mean that we have an access to financial education that has been big forever, but nobody was paying attention to it before crypto opened the door to it. Like, before you had this thing that could be called a giant casino, like people were like, oh, now they start to understand. And like, if you believe in democracy, you have to believe in education, because people need to be educated to make the right choices. And if crypto only had an educational value, then it's already a lot. Then I do think it has
that's really true.
Way more than this, right? But
it's so true. And I'm sure one day we'll look back and people don't even think about money. It just operates behind the scenes like the internet, right? Like, could the average person describe how the web page flows? Probably not, because it's not really topical. But maybe in the year 2000, everyone was talking about it, that maybe people were more, these things kind of ebb and flow. I've heard the US is really, people here are really good at driving cars because everyone has a car and you just drive everywhere. But in the future, you won't drive a car, it'll just drive itself. So then that skill will atrophy. So it's kind of interesting how these things ebb and flow.
Yeah, that's a good point. Like there is this thing, like today, money is a very efficient way to drive behaviors of humans in general. So knowing about money, knowing how it works and knowing how it's issued and knowing how like it enters the systems and all that is helpful in understanding, or at least in trying to understand, like how the people you vote for are trying to make your life better. Right. And like it is such a central tool to the life that you live, that anything that helps you understand money is, in my opinion, positive, right? Yeah. So agreed. I'm not saying everybody should just think about money all the time. This is going to become toxic, but it's a thing. And as I think you made a very good point with COVID and healthcare, like if people do not understand those things and just take healthcare for granted, or the other side, like just take healthcare for like something that, you know, that should not exist and all that, it just makes everybody think about healthcare policies when you have a global like health crisis. And I think like a crypto has been COVID for money, maybe, or something.
Yeah, that's good. That's a good phrase. Claude, where are you online? Are you actively tweeting or writing anywhere?
I just reconnected to my like very old Twitter account and barely started tweeting again like a couple of weeks ago. So yeah, my handle is KLODIO, just Claudio, and the same handle on Telegram. This is where I spend way more time on Telegram than on Twitter. Telegram, I guess, you know, old generation in 2017, the whole world of crypto was on Telegram. So people wanted to reach me, just go on Telegram. I was on some public channels and all that. Now, most of the world has moved towards like first Twitter, then Discord. So yeah, moving to Twitter and Discord. But like, yeah, let's say I am more vocal as part of my company. I don't publish my image that much. I write as Mimo, right? When I write as the company writes and stuff.
I want to hear some of your ideas.
And,
awesome. We'll have all the links to the company in the show notes. And congrats on all the progress so far. It sounds like you have a great team and have made some really meaningful progress.
We do. The team is really good.
Thanks for hopping on, man. I wish you the best of luck, and I hope to have you back on someday.
Well, that would be great. And thanks a lot. Like that was a very good conversation. I like to hear and it's pretty rare. Like in our product, we do not really promote to the US, as I was telling you. So it's really interesting to have conversations with somebody who's from the US, right? It's like, it's a radically different type of conversation. So very good. Thanks a lot for today.
All right.